Yo, good morning, Tony. Good morning, everybody. I think we're going to have an interesting session, to say the least. Fix my glasses. Yeah, so we'll see if price wants to open up today. And we're going to have to see what happens. Still sideways. Not really getting much of a follow through. We have news at 7 a.m. Just double check. Yeah. So 7 a.m., we may not do anything too crazy up to that point. But we'll see what happens. Hopefully you guys have had a good week so far. Everything that we've laid out pretty much is, at least for the most part, came to fruition or kind of just hasn't really given us that follow through. The Dow sure did, but the S&P and the Nasdaq are kind of lagging behind. I think it's because of the tech heavy view. I'm not 100% sure. Obviously, that could be wrong. The things that are impacting stuff. Of course, the fear of war. We now have this thing going on in Mexico. We'll see how that impacts things if it does. Yeah, pray for the people in Mexico, by the way. That's what happens when people aren't doing what they should have done. They let a problem get so bad. Now the U.S. has to go clean it up. Crap. 1, 2, 3. Good swing moves. Perfect for me. Tony, would you say that you like to swing trade? Good morning, George. Yeah, it's really sad what's happening in Mexico. This is why leaders should work with the U.S. and stop with the nonsense. Really, like people criticize, and then you look at the country that the leader is, living in, who's criticizing the U.S. And it's like, bro, really? Like you have more problems than to attack people in the United States, the leaders here. I think they got a little bit more problems than they probably like. So maybe I should focus on that and then work together. I like to stretch. I like the stretch micros. Yeah. You really only need micros. I've been talking about this for years, 20 to 30 points. Obviously, I got it from ICT. Was combative towards it at the beginning, but I was pushing too hard. I could push harder now if I wanted to. I do sometimes. But at the same time, let me see. I can't believe that I let you trade that many with 59K. What are you referring to, Tony? Oh, I can't believe it let you trade that many with 50K. Yeah, you could trade up to, was it like 4 minis? Or is it 4 minis? Maybe not. But however many minis, they don't have it as a 1-to-1 like many firms do with like Tradeify. They don't have it as 1-to-1. So 1 micro or 1 mini. They have one mini, and you could put 10 micros, or 2 minis, and you could use 20 micros. Not every firm does that. Has that that equal split. It's normally like for Top Step, if you have 1 mini, you can only trade 1 micro, right? If that's your limit. They don't break it down the way it should. But that's why I'm very particular about my prop firms or things, any of them that I talk about. And again, they're a backup. Well, they're a way to gain capital, so then you can have a personal account. Because you never know with these companies; they can all go out of business. Nobody knows. No one knows for sure. I mean, look at Top Step. What's happening with them? So I'm just like getting stuff organized real quick. Minis, give me, and then this goes back to what my bias was. Yeah. Props. I'm using six. I'm using 6 minis, 60 micros. Yeah, that's perfect. That's that split that I was talking about. They break because 10 micros is 1 mini. So since that's the math on how it is, you'd imagine that that's something that they would do across the board, right? But some of them don't. They have a 1-to-1 split most of the time. So if you're able to have 1 mini, they're going to allow 1 micro. It's easier, I guess. I don't know. I don't see how it would be easier, but good morning, Fotis. Appreciate you hopping on, brother. Whoops. What the heck was that? So yeah, nothing's changed, right? My perspective, there's nothing different from what we've been talking about. I do believe that, again, if we stay below this, we've pretty solidly respected the analysis. This is a daily fair value gap. I mean, everything that we've talked about has been holding up. So unless something changes, nothing changes. So again, if it's all going to remain this way, we'll see it drop at some point. The Dow sure dropped. The Dow definitely dropped. I wanted that in the Nasdaq. We'll see if we can get it. Again, our line in the sand for bearishness to basically stop is if we were to really get up above this high. This is an intermediate term high here. This one was, but then this one became the intermediate now. So, and then of course we haven't gotten above this. I did talk about this high. If price was to trade up to it and then immediately reject, it could be a stop run. But if it was to displace aggressively and get above this level here, that's our line in the sand. And then we would have to look for buy side if that was something that got traded to. We're in the end of the month. So if you visualize the monthly candle so far, we have a large wick above the open price. Then we got the body, came all the way down. And now we set another wick, and now price is closed here. So the body of the candle for the monthly candle is here, right? This is the lower portion of the body, and this is the open of the body. Okay? And we got pretty large wicks above and below. Come over here to the monthly chart, right? You could see that's in fact the case. 26.25. $26.25 right there. So yeah, again, nothing's changed. We are below the order block there I talked about yesterday. I think I talked about this on Sunday too. If price was to get down below that, we have to watch how this is going to be treated. Is it going to respect the midpoint of this? So I think that'll continue to be supported. We got this daily fair value gap. We got this stop run Again, change in state of delivery here. Very shallow, hasn't really done it too aggressively, but we're opening up for this new candle on the day, rallying up a bit. As long as it stays below this order block is still intact. Right? Now, if it starts to trade through that, right, and it just like shows no real resistance to want to go lower, we may have to make an adjustment and maybe target this high. I'm going to be more on the side of this remaining bearish. We do have relative equal lows here. We got this failure swing in here. And then we got that failure swing as well. And again, we have a standard deviation projection, taking it from this high to that low, getting us our standard deviation projection. Where the hell? Is it off a little bit? There we go. So yeah, I wouldn't be surprised if we end up reaching down into this level. If you go to the 3-month chart, I talked about this the other day. We have that fair value gap, right? This candle is going to close for the month bearish, I'm assuming. So if it does close like that, we now have our third candle in a fractal high that was created, and we got this up wick that was very strongly being respected. So the whole first quarter has been an attempt to reach for sell side a little bit. Then we got the S&P that's down here too. We got the wick for the S&P. But if we open up off the heels of this, remember a fractal high that forms many times, the next candle after that third candle prints, if there's a logical PD array or liquidity pool that could be targeted, that makes sense for it to, reach into that and then continue, in this case, the run higher potentially, it would make a lot of sense for them to do so. It may take, again, this next month. We also have the new quarter coming in. So, and we're in a bearish seasonal tendency right now, right? At the start of the year, like I mentioned before, seasonal influences are pretty heavy around this time. And then we're going to get into even more pronounced bearish territory. But, we'll see, right? This is what we do have on this quarterly perspective. So if this continues, then again, I have my eyes on that. And then when it taps into that, I want to see how it treats that. Because if it taps it and then aggressively displaces, right, this all have just been, like I said, a manipulation, accumulation, manipulation, and then we may get the middle two quarters, the second and third quarter, to potentially start a run higher. Maybe not so much the third quarter. Third quarter might be a little sketchy because it is during the summer months. And then we go into the fourth quarter, which has a Christmas rally and then comes off the high like this did, right? It rallied up and then came off the high. The last quarter can be attributed to this wick here, right? We got the first quarter of last year, big decline. Second and third, fourth quarter, ran up, created the high, and then came back. You can see power 3 perfectly from this quarterly view for the yearly candle. And this is obviously a bullish yearly candle, right? But it started, declined, just like how power 3 happens on the weekly chart, it also happens on the quarterly perspective. Every time frame has power 3. So just think about it, right? Is this beneficial to you, right? How can this benefit you when you're trying to project bias and narrative on a long-term basis? Not just, day to day. This reinforces your day-to-day behavior because then you understand what the overall tone of the market is. And then you can just kind of help yourself navigate pretty clearly. So yeah, hopefully that makes sense. We've talked about that before. Let me take some of these annotations off. So again, we have this wick in here. We have a failure swing, and we have this failure swing as well. We came down below this order block here, dragged that over. You see how it respected it? We've also closed below this wick, more importantly. And now we can't even get up into this wick. We are inside of this low to that high. And we're in accumulation, right? It's kind of just going sideways. all the assets are kind of doing that. The indices, all the indices. But overall, they look like they're still trying to reach down a little bit. So, with that being the case, if we can get down below the 50% of this, and then maybe use it as a rejection level, we're rejecting the 25%. And again, that lower portion of this wick here on this weekly chart. So, it's the end of the month. Like I said, we got the open here, rally up, decline, set the wick, and now we've come all the way back into this for the month. So, and it's the end of the month. So expectations should be really managed. But again, we could look to try to dig lower because it has been sideways for a little while. And that's the main perspective, especially if dollar continues this run higher like it is. All right, if we go to the dollar, it's doing pretty much what we assumed it would do. Come back down. As long as it stays above the 50% of this, the green arrow is going to be relevant. There's a 50% level in here for, I believe, that's a quarterly fair value gap. So you can see the respect to that. Also the respect to this order block. Also, that comes off the heels of this wick being respected. That wick comes off the heels of a large yearly stop run. It stopped out the previous year's low, right? 2025. So it dropped down aggressively, took that, and then we've accelerated, and now we've changed the state of delivery here as well. So, and you can see the rejection into this. It can't even get to the 50% level, right? Well, I guess it kind of did, but it immediately ran away, right? That 50% is here. That's also with the daily fair value gap. So we got the weekly agreeing with possible continued buy side, daily potentially agreeing, seeing that PD arrays are being respected, and we got this rejection really confirming that that's the case. This reinforces even though there's not much that's bullish about the dollar, it could end up tanking. I'll be back to being bearish if it takes this low out. But for now, what is it showing us, right? We got the wick here, couldn't even trade into it. All these things that I just mentioned supporting buy side. We also have a potential type 2 dealing range here, taking this high. So it may take us for a ride back to the buy side off the heels of this. This high to that low should be looked at as a balanced price range. It is. We got a fair value gap overtaken by a opposing displacement. So that in itself, that range should act as a BPR, but we do have sell side and buy side. So 50% of that should have been respected, like I said ahead of time, right? I called this before it happened. And now we can see that it's coming off of that analysis. So nothing's changed. And nothing in our analysis changes unless something changes. This is not showing anything changing our perspective. It's just agreeing with the analysis that we've done over the weekend and yesterday in my private group. Okay, so with that being said, take a glance at the bonds and yields. We do got the yields dropping, do got the bonds kind of reluctant to drop. So that's bullish generally. So we have a cracking correlation essentially. That relationship being the way that it is should also support this going higher as well. But the strength in the dollar, for whatever reason, there's really nothing strengthening the dollar right now, but for whatever reason, the dollar's holding up. So we can't just go off of what we assume. We have to go off of what price is showing us, and for now, it's not showing us that bullishness is over. When does that change? If this ends up getting down below this low, because then I'll look at that wick and this stop run, right? We'll have a stop run. Then we'll break this wick, and that'll be a balanced price range. Excuse me, going to the sell side, especially if we were to invert this daily fair value gap here. Let me actually do something with this. Pull this over there. Kind of get it out of the way a little bit. Okay. This is a monthly wick too that we're trading into, and it is a weekly bearish breaker, low, high, lower, low. More so if you look at the 3 day. You can can see the low, high, lower low. So that down movement, we don't want to see that taken out if price is going to go lower still, right? If this weekly chart here or higher time frame here on the left side was a 5-minute chart, what would you be thinking, right? I wouldn't really be, well, at least for now, I'd still think that there's some life available for it to go lower, but we have to see some serious displacement. Preferably, it takes this high and then breaks down below this low, creating a bearish breaker. But we have things, before that, like this fair value gap on the daily, this swing low too, right? So we're going to vet that perspective throughout the rest of the morning. And if it just starts to rapidly reprice above this high, then, we may have some problems. And then we have this order block here to go off of, and the inversion of this this daily fair value gap. Where the hell did it go? There. What's that fair value gap? Oh, what's that one? So yeah, visually I have a lot of things on the chart, so you guys know kind of what's in my mind. My execution chart is a lot cleaner than this, right? But you're here to learn, right? You want to be able to know visually what you're supposed to look for, and me just saying stuff doesn't really burn the picture in. And I encourage you guys to mark off some of the things that you see here if you don't have them already. This is a previous new day opening gap. Surprisingly, it's been used numerous times. Maybe I shouldn't say surprisingly. But, this is the importance of having these previous levels. Let's see. Do we have a new day opening gap from yesterday? Not really. What about the other day? No. Just double check. Whoop. Just double check. There's no news obviously till 7 a.m. So my rules are I don't take trades before that. I at least have to wait till the macros. Right, we're in a macro right now, but I'd rather wait till the 6:30 open. We don't want to get caught in manipulation. Do got a new day opening gap here. That's pretty interesting. That order block low on the daily chart actually aligns perfectly with a previous new day opening gap. Let's see where it is. There's not even another one there either. We got regular trading hours here. Got a regular trading hours here. That's what these little yellow boxes are. So the high, we're hovering around the high right there of a previous new week, regular trading hours gap. So the low here was respected too. Got another regular trading hours gap up there. Let's see, is there an imbalance there? Yeah. So there's no buy side offered in here. Price is currently at 88. So maybe it looks to come up there. We'll keep that on the chart. Relative to yesterday's close, basically the anchor point for the new regular trading hours gap, we're going to be opening up at a premium. If, say, we were to open up right now, right? It was 6:30 right now. If price opens up, there's a discount, regular trading hours gap. But price relative to yesterday's trading, relative to the closing price of yesterday, we'll be opening up at a premium, and there'll be a regular trading hours down below at a discount. And many times, if it does this, and you're, say, bullish, price will open up, run down to the 50%. Sometimes it closes it all in, but most of the time it'll go to the 50%, like 70% of the time. And then it'll look to continue to go higher. So that'll be part of like the early manipulation for the New York session, the New York Open. That's a perspective that ICT talks about, and it's very, very, very consistent. So if you haven't looked into this stuff or seen it this way, I encourage you to do so, because you'll be pretty surprised, honestly. The dollar has equal highs up there. Keep tabs on that. It's a previous day's high. It's actually a previous week high. It's also Friday's high. The dollar came down, swept out Friday's low. So Friday's low is being used as counterparty liquidity. Took it, and now it's running up a little bit. Not sure if they're going to really want to keep going so aggressively pre-market. This fits what we talked about earlier, though, with the dollar going higher and being bullish. It literally opened up, directly went right below the Friday's low, swept that, and then we've immediately started to trigger a market maker buy model. And that's justified as well, right? This run lower to go higher as a market maker buy model inside this larger potential move higher after the change in state of delivery here, right? And again, once we get up above this, order blocks leave behind balanced price ranges, right? So if it's going to be a valid order block here from this, say, three-day chart, we don't want to see it break the 50%. Ironically, that 50% is the mid portion of the daily fair value gap there. Not too sure why I have them in different colors, but you get the point, hopefully. And this high dropping down, price getting above that, it should be able to act as a break or two. If you go to like the 16-hour, high, low, higher high. So the sub movement in here, technically all of this can be looked at as the breaker. Preferably it stays above this. Now that we're above it already, it should not necessarily try to attempt this. We should leave that intact. That'll further support what it is that we're trying to do in terms of seeing it go higher. And that should translate to this going lower. The indices are in a consolidation, right? We're in a sideways range since last week, and it hasn't really done much. You know, we've set equal lows down here, right? We did tag Friday's low, which I talked about the other day. We have Friday's high that's available here. So I'm going to keep that stretched out. Push that to the 5-minute. It's a 4-hour inversion. Oh, right there. So yeah, how we're going to calibrate this at the moment. We're going to take this high because we got buy side, sell side. So I'm going to get this 50% in here. That's going to be my line in the sand, really. If it breaks up beyond this, I'll look at this as a buy model. And it may look to try to target the buy side, right? We may continue this, sideways you know, back and forth, we can actually, instead of using that, because it's in the middle of this one, we can actually use this entirely. Oh, why didn't it work? There. Use that 50%. I think that'll be a little more accurate. We do have a breaker in here too. It's a low, high, lower, low. That's why this was respected and had a pretty nice move. We talked about this short yesterday. We had a great session yesterday with my private group. Lots of stuff was learned, but yeah. So I'll continue to have this perspective. I don't really think that if it's going to be bearish, well, it's not that I think, I know for a fact that if it's going to be bearish, I do not want to see any of this get targeted. This is actually a previous day's high too. So that would be put in jeopardy if we start breaking towards it a little bit too aggressive. So we'd have to quickly adjust, and then, you know, we'd just be trading intraday volatility, previous hourly highs and lows, session highs and lows, until it decides what it really wants to do. It seems like it's building liquidity on both sides of the market. There is liquidity on both sides. But yeah. So we're not gonna be in a rush because there's news at 7. We'll be a little bit more excited, quote unquote, after the 6:30 time, because then I'll look at the macro. Because again, time is everything. You know, if you don't have the right timing, it's not going to be right. You know, if a PD array shows up randomly, it doesn't really matter. You know, it's just an aimless PD array. But if it happens in a time that's correct, after liquidity is taken, preferably for most models and PD arrays, and you can align it with you know, some type of higher time frame, fair value gap, or wick quadrant. ICT has mentioned numerous times over the last couple of years that's how you kind of cement what PD array to seek, right, and utilize, and which one can be trusted. You know, we've talked about this as well, put it into use. But yeah, you know, some of these things slip by people when they're learning ICT concepts. Hopefully you get reminded being here. Yeah, you guys have any questions about anything? Is it clear kind of what my perspective is? I do still believe that unless this is rapidly traded through, you know, we're at this daily bearish order block, right, which is something that I really want to see hold. Because then we should be able to get some really, really dynamic price delivery. Got this wick in here. Let's actually do something real quick. Break this down. Crap. Let's take this monthly wick. Look and see what it looks like on that lower time frame. So you can see the mid portion of that wick on this monthly monthly perspective. Look at the confluence that has with this run up and then the rejection. Look at the beautiful confluence in there too. That is pretty solid. And this was ironically a 4-hour inversion fair value gap laid right over top the monthly 50% of the quadrants, right? Or that 50% of that wick there from that monthly chart. And price had a dynamic response, right? So we're hovering right below the monthly wick 50% level. We have trendline liquidity down here. We do have our projections that could possibly get price down here. If it tries to reach for that, I wouldn't be surprised if it tags this. But again, from this quarterly perspective, you know, we also have this here as well. So long term, I wouldn't be surprised if it tries to reach for this. If we continue the bearishness, you know, anything can happen. But if this was like the 5-minute chart, I would expect for that to happen, right? If can you guys see that? Yeah. So if this was the 5-minute perspective, I would be literally anticipating either this wick holding, continuing to push price higher, or we create a fractal high and then price reaches down, tags this before it looks to try to continue. You know, just because it's the quarterly, monthly, yearly, weekly, daily chart doesn't mean that, you know, the principles we use on the lower time frames in terms of market structure and how price operates changes, right? It doesn't mean that that changes just because it's a different time frame. You know, it's a very important thing that most people overlook. And, you know, once you stop overcomplicating things and really lock into some of these things that you probably already know about, you'll be very surprised at how powerful things are and how little you really need. You know, I'm very thorough. You know, I like to have certainty, at least as much as I possibly can behind the things I do. And it comes from, you know, being very detail oriented and seeing what is in fact in play at the current moment. I'm going to actually pull that. I'm going to take that off. See that quadrant too? Pretty solid. So again, what's the importance of having, hold up. Ay. So think about it. What's the importance of having a level like this on your chart? Well, when you're on the lower time frames, again, these are very important levels to have going down to the lower time frame. Because then when something happens inside that level, like if a breaker forms, right, or a stop run that leads to a change in state of delivery forms in that level, or if a fair value gap is laid over top of it and it trades into it and you're bearish, right, overall, it should have a pretty dynamic response, especially if you could find it inside of a macro. You know, like this was at 6 a.m. Pacific Standard Time. You know, ironically, that's inside of a macro, laid over top of a monthly wick, 50% level, right? And it's the creation of the daily bearish order block too, right? So again, nothing's changed. So what am I looking for? I'm looking for shorts, right? I want to see if we can respect this, and as long as it does, you know, we have pretty clear targets down below. I've had this here the whole week, right? Since the week started. It didn't just arrive. It didn't just pop on the chart. You know, we've been had this perspective, you know, before before any of this stuff started really being engaged. Let me see. And again, because there's no news early on, you know, we're not looking to be reckless. You know, we're at the end of the month. It's already been a really good month so far. It's been a great start to the year. And we haven't really made too many bad decisions or had any bad analysis that doesn't go to what we're trying to see it do. So yeah, we're going to stick to the opinion that we've had so far. What is this? Okay, it's not even labeled. I'm not sure if you guys could see these really small like details in there. I'm not sure if it's blurry or not. So if you guys could let me know. that'd be great. Hopefully they're not. But on these calls, I don't like to have too much latency because it kind of sucks. It's kind of like live stream is the way it is. I think there's like a 5-second delay, but that's better than 15 to 20 seconds, right? I mean, but I have to lower the quality a little bit to be able to have that lower latency. It's kind of like the trade-off that we're forced to have. Hopefully that changes at some point, but for now, it's kind of just what we got to deal with. So yeah, let me know in the chat if everything makes sense. If you're in tune with what it is that we're looking to see. And if you have any questions, we're still before the open. We are inside the macro right now, so I think it did offer maybe something in there. Let's go double check if there's SMT. So yeah, we do got SMT. We got this buy side, sell side delivery. If this is bearish, this should end up becoming a balanced price range. Ooh, I don't like that. These equal highs. Sheesh. That is too perfect. Holy crap. Do we have the same thing down below? Yeah, we'll have to see. If it does start to get up into this level, we'll have to obviously adjust and look at a market maker buy model. For now though, the way that this is stopping so aggressively, it's showing this as a balanced price range. We'll see what the open does. If the open comes out and it just starts rip roaring to the buy side and dollar maybe declines from where it's at, that may become a problem. Can you guys see the dollar down there? Expand it a little bit. So yeah, you see the dollar on the bottom left. I'll keep at least that much candles. It's covered by the webcam, but you just want to make sure you know what the dollar's doing. So you don't even have to have like all of it. Obviously we'll flip back and forth, but yeah. So hopefully it all makes sense. Check your Discord when you get a chance. Okay, let me go check real quick. Oh, nice. Did you just pass an account? That's what it looks like. Nice. I appreciate you saying that, Tony. Definitely excited to see how far you take this. You've already been doing some really, really good things. And again, the goal should mainly be to get to a personal account. It's okay to have funded accounts. It's part of my portfolio. I have lots of different things that I do when it comes to investing. But it all started with trading, right? So if we understand this, you could do many things. You could do options. You could do long-term portfolio management for a retirement account. You have access to doing many, many things, including a personal account, have a funded account for like income-based trading. That's how I use it. I don't use it to flip the accounts. I use them for income because you can't even withdraw all the money. So, why try to build it too aggressively? Just use it as income. Build a buffer, obviously, but look at it as an income, and then try to maybe take that and then put it into a personal account. If you make like $500, or not 500, if you make like say $2,000 and you withdraw maybe 1,000 of that, take half of it to use. Obviously, take some taxes out and stuff relative to your country and where you live, but take half of it, use it to pay things as an income, and take the other half and start building that personal account bucket. Because then if you have a personal account, unless you blow the account, you have full access to everything. You make the rules. You can push and be a little more aggressive when you're really confident without worrying. So they all have their place, right? All these different things have their place in your process. in the architecture you're building financially, you know. But it shouldn't be all your eggs in a funded account. I don't even care if you have 5 funded accounts or 5 different firms with 5 different accounts having more than 20. I don't even care if that's what you got going on. You need to make sure you're focused on a personal account. I've said this before, said it for years at this point, because you guys know, if you've been here for a while, my experience, you know, what happened to me with FTMO. And if I didn't have this mindset, and no one told me this, I just assumed that, you know, this is a good idea to do, you know, to have it split and really focus on a personal account just in case. Because who's to say these companies all stay intact? You know, they're, you know, greed and human nature is what it is. They're not thinking about you paying your bills. They're not thinking about your prosperity. They're thinking about their bottom line. That's why these rules are the way they are in these funded accounts. You know, but that's why I've always said you want to have this plan. Main objective is to get a personal account. Honestly, anything you withdraw early from a funded account, you should have this back end. So like already building. Like if you make 4 or 5, 10,000 or even 2,000, take half of it and put it away, right? Put it into your bucket for a personal account. And whichever broker you go with, you know, it doesn't matter. You know, they're all kind of the same. I like AMP. I haven't really had any problems. ICT talks about them too. You know, so I haven't really had a problem. And if you have an issue and you record your screen and you can prove the issue, they'll fix it. You know, like say it doesn't let you out, or there's like a glitch or something, you know, that you want to talk to them about. They sometimes can help you. You know what I mean? Within reason, obviously. There's some stuff that they can't help with. It's just the nature of things. It's the risk disclosure, right? Things can happen. But if they can fix it, you know, if it was like a technical issue or whatever the case may be on their end, you know, they'll be more than happy to fix it. That's why I like them, you know. And their margins are really nice. You know, it's definitely very trader friendly, honestly. You could have $5,000 and start your journey. You know, I think it's like for a micro, I think it's like $200, $300 margin that's required. So as long as you have $300 in the account, you can trade 1 micro. If you have 5,000, you have a little bit more leeway. You know, so I don't know. These are just some things you want to think about. And if, you know, I'm giving you good advice. The best advice I can give you with these funded accounts is to not put all your eggs in that basket, because that basket can spoil, you know, or blow up, right? Because it's happened to me. I know through experience. You know, I told the story before with FTMO. It's not pleasant, you know, especially when you put your all into this thing and you start making progress, and then all of a sudden someone denies a payout or completely removes you because of so-called regulations, and then denies your payout on top of it after you worked so hard and made thousands of dollars already and multiple withdrawals, and you were with them for years. They don't care. It's just like a job. Job doesn't care about you. Most of them, at least. Neither do these funded accounts. Trading with a firm is like you having a job with that firm. You're just like a contractor with them. That's how it's looked at by the IRS. And honestly, if you think about it, that's pretty much what it is, while they're making it even harder by adding rules that are ridiculous. You know, like making you feel like you got to be perfect or over leverage and hurry up. So again, they're a good tool. It's a good opportunity, but you got to do it safely, responsibly, and not make that your end goal. You know, it's great to have 50 accounts and just trade with $200 risk, make $200 across 50 accounts, and it multiplies. That's great. You know, there is leverage there. You know, there is a benefit to it. But at the same time, if you're being a risk manager, you know, you got to manage that risk. And that risk is pretty high if you have no other option, if that's all you're doing. So, you know, split it between the profits you make with a funded account like adding to your account if you want to, if you have like one or two. But most importantly, take it away and put it into a bucket for your personal account, and use the rest for whatever income you want. Honestly, I would tell you to reinvest all of it. It's not financial advice. I'm not a financial advisor. But what I did, right, the first 20 withdrawals, all of it went to my personal account. All of it, you know. And then, of course, bills and, whatever. I didn't buy anything. I still don't buy anything. You got to build that financial wall if you want to be a full-time trader. You can't be worried about materialism yet. It's okay to get nice things, but if it's not living or reinvesting back into your business, that's how businesses operate when they're, early on. And if they don't operate that way, that's why, businesses fail, because they don't plan properly. Their business will start to grow and they'll start doing really good. And then all of a sudden, they got that dopamine hit, like, oh, I just made this, so let me go spend it all because I deserve it, right? I deserve to be rewarded. When in reality, the reward should be prepping you for the future because you now have the opportunity to do so. And then eventually, if you do things properly, very, very good things can happen to you. Maybe it's delayed a little bit. Maybe it takes another year, 2 or 3 or 5 to get to where you're truly trying to be financially. But that's a good wait, because that 5 years is gonna come. 10 years is gonna come. And how you do things today is gonna really affect how your life looks when that 5 years does come. You want to be prepped and be grateful that you made the right decisions. That you saw the future, and you wanted to position yourself in the best way possible so you can reach that, financial freedom, that prosperity that all of us started in this industry to get. But, you gotta be patient. And if you ever get a windfall victory, say you make, $5,000 in a day with a prop firm, right? Maybe multiple. Again, take half of it, put it into a bucket for a personal account. You're already halfway there to have enough to reasonably start with a, reasonable amount. Preferably 10,000 is when you want to, really get a personal account. That's the sweet spot, at least to begin. And if you trust yourself, you can put more. But there's a difference between having a personal account with a large size that you've built up over years versus having, prop firm money, thinking that we have all this money to trade with when we don't. You could have like 500K accounts and then, talk about, oh, I have a 500K funded portfolio. Okay, well, do you really? Because the risk on each of those accounts is like maybe 5,000 max, or you lose the account. So you really only have you really only have like 25,000, right? In terms of overall capital that you have to expose. So do you really have 500K? No, you don't. It's packaged in a way to make you feel like you do. And then they also say you could trade 15 contracts, right? Like ICT points out all the time, right? It's a trap if you think that way. So you got to put it in the proper place. And the proper place is not all your eggs are in a funded account. That's just not good advice, So if you are already making money on, funded accounts, if you didn't think about things this way, I encourage you to make that change. Yeah, it seems like everything is going according to plan. We're just kind of pre-market open. So what is it doing? It's manipulating. It's holding price. I do think that by the end of the day, we will be able to get down to here. We have a high, low, high. It's a failure swing. Oh, what do you know? We have SMT here at a very significant level to have an SMT at. That SMT is at a higher time frame PD array, being the daily order block. that off. Let's go put this over here so it's complete. Do I already have it? Yeah, I think I do. Do I? So yeah, we'll see what happens in here. Yeah, there can be an argument probably if we were to drop down here for some type of thing to take place. There was a breaker here off the heels of that S&T. So yeah, I'm still very much behind seeing this go lower. So yeah, got that daily order block here. Beautiful. And if that's going to continue to remain the case, thus going higher, we have previous week's high here. Got another previous week's high on the dollar. So we'll see this just continue to rise, hopefully. But we're still in this range, so you got to be very, very cautious about that still. You should not be over leveraging. You should not be over trading. And you should be waiting for time. We got time potentially aligning. So we got a PD array on the daily chart. That's price. And now time, we just need a macro and then our model to show up supporting that idea. And then we could, again, target things like this. This is previous day's low here. That's what I'm aiming at. Again, I've had this like this for literally the last couple of days. It's been spectacular. Our analysis the last couple of months, just the last year, like this year is just continuing last year's momentum. And it seems nothing's changed. It doesn't mean we've been perfect, but what it does mean is that, we know what the hell we're talking about. Okay. And hopefully you guys have been learning a lot this year so far. Okay, I'm not too sure what this wick is. Okay, so that wick right there, let me see. So we're gonna have a mitigation block here. We did have a breaker in here too. If you look at that, what is this, the 5-minute chart? We had a breaker that's set up here. We got equal lows right here. So again, our objective is still going lower. That's what I want to target. So let's see what the open does here. 630 came out. We now have a mitigation block. It's a good thing. Got a high, low, failure swing, SMT at the highs. So that should be a balanced price range. If it's going to continue to drop off of this price delivery in here, we do not want to see 50% traded back too. Ironically, 50% is the daily bearish order block here. This is going to be a very significant level in here for today. This is the PD array on the daily chart. That should be the gas tank to blast this to the downside. We just got to align time with that. We have price, we have liquidity, right? PD arrays, that's price. And we now have potential targets as well. We just need time. We need time to align with our model, wherever that's at. Whichever move you guys like to use. It's a mitigation block, like I said. So let's see how that is respected. Got a breaker here. Not really too much of a pronounced move, but it did tap this and start accelerating. So I think that this should continue. We also have this is a mitigation block, but it's also a bearish order block too. 86. 86, is that it? Oh, 819. So that was like up there. So yeah, now we're accelerating, right? I think that this will continue. We got the previous day's low here. So let's see if it can give us something. That was a nice reaction off of that. So yeah, we've already purged this out. So I do think that we should be able to accelerate. We don't have news until 7 o'clock. So, you know, I kind of hope that they would wait a little bit. They may still wait because there is news coming. But it kind of depends on how aggressive they're going to want to run this. And, you know, we'll see. I think it's going to be aggressive because there's the failure swings down here. That's low resistance liquidity. You know, versus something like this, that's high resistance because it's got a stop run already. So we'll see what happens. We're not in a rush. We don't take trades right at 6:30. It's just the way it is. So if it rips, we'll be more focused on continuation. Let's see, is this going to give us an immediate rebalance? Very, very tiny regular trading hours gap it turned into. So we got regular trading hours being traded into. It's going to be an immediate rebalance here. I think it is, yeah. It's going to continue. There she goes. Friday's low. It's relative equal. So now this right here, 763. 763 is here, so that low right there. You have a high, low, higher high, and then a failure swing, or a reversal with SMT. So that's a breaker in itself. So if it kind of already did, it kind of already offered it there. Again, the previous day's low is being targeted here. Damn, it kind of moved a little bit sooner than I would have hoped. Wanted to kind of get closer to that macro, but, you know, kind of is what it is. This right here was a beautiful response to this down wick in there. If it comes back, it shouldn't fill this in entirely. It should just give us a very shallow, pretty shallow retracement. But we should have really no issue getting down below previous day's low, like I said earlier. So that's where my attention is. So yeah, if this retraces, and it is going to be something that moves lower and doesn't retrace too deeply, if it retraces into this, like it is, it should not fill in that entire thing. It should just keep going fast. If this is going to continue, I think it will. But we'll see what happens. This wick in here leaves this upper part of the fair value gap as a balanced price range. So price coming back into that, it should be institutional order flow entry drill. You know, I'm not sure if it's going to want to offer that or allow us to get that. Okay, it kind of traded into the fair value gap. If we go to the 30-second chart, there's one right there. So institutional order flow entry drill should be able to continue. Yeah, it's always a bit chaotic right at the open, you know. So we'll see if that wants to continue like that. Again, I'm waiting till the macro. I'm not willing to engage right now. Right here, I could have made an argument for, but you know, I had to make the decision to go against what my rules are, and I'm not going to do that. Overall, what we've assumed that price is going to do, it's definitely doing it. So now we're creating another order block in here. So let's see if that continues. All you need to do is get it down below that, for this particular idea. It's a little late. More of a continuation, so lower risk would be required. If you engage something like this, you got to lower your risk. You also have to map out what the risk would be, right? Where's your stop going to be, right? Well, it can't be, I wouldn't put it above this high, right? If you entered in here, it'd have to be preferably above this high, and that's a little much. When price extends like this, the risk allocation is something you got to be very cautious of. Because if it doesn't make sense, then why take it? Why not just wait? And again, the macro's coming soon, so we'll see what the macro provides us. So yeah, if we wanted to see if this could be institutional order flow entry drill, it should not have to come up beyond this. So we got that wick in there, but we'll see. Very rapid start to the morning. All right, let's see what this leads to. See, everybody got pulled into the shorts, right? So think about it. We're coming back to a reasonable level here. We'll see what happens. Dollar's not too excited. It's kind of stalling out a little bit. Again, this is why we wait for the macro. Just look around. Yeah, that was a nasty retracement, huh? Look at that. Oof. I thought it would at least get to the previous day's low. I think it will at some point. This is just how nasty it is in the like first 30 minutes. It wants to get everybody thinking about something. And we got the dollar kind of falling. So let's see what this turns into here. We got sell side, buy side. If it comes down and respects these levels in here, say it creates an order block and then trades through it, that may look to come and take this out, and the SMT up here, will have just been short-lived. Still inside of a range, right? We're still kind of sideways. Again, we don't have news until 7 o'clock, so they may still wait for the news. That's why I'm kind of waiting and hesitating to really pull the trigger on anything right now. Because I just know how they are with the news. They'll do a lot of stuff that takes place to build sentiment, and then the news comes out, maybe punishes them a little bit, and then all of a sudden it goes into the direction it's supposed to go, or that we assumed it would go in. But yeah, this right here, we don't want to see this continue if it's going to go lower here anytime soon. Yeah, so now it's starting to look a little more likely that it's going to take these up here. So I'm waiting. Like I said, I'm waiting for the macro. Nasty wick. Look at that. It looks like it's building more liquidity. Still range bound. So I would not be in a hurry if I was you. Like we said earlier. Yeah, it's a nasty turnaround. I'm going to need a good amount of, reversal here to go lower if I'm trying to short. This is not anything that's convincing about shorts. We got to change it in state, right? Or shift. I think we just created an order block and took it. We're kind of respecting this one here. So we're going to have to wait on the shorts. Still accumulating positions inside of this. At least that's how it can be seen. We're still not outside of the bearish order block here. We got equal lows. So again, nothing's changed just because it ran up like this. Things start to, look better the other way if it really starts to ram higher. You always want to start the day with one objective, with one direction, and then, keep tabs on a counter trade, something that goes against what it is that you're trying to see. So just in case, if you do have to make adjustments, you're able to. I don't see that as the situation right now. We're still inside of our main framework, which is a daily order block holding. It has to break through the 50% of that for us to turn that off. Just like if it was a 5-minute chart trading inside of an order block we're using. But yeah, this vicious decline with a rapid retracement back through it, that puts this in jeopardy. They may want to look to come up there first. They did leave the low down here. Previous day's low, it just added another low. Took out anybody that was trying to buy early on. Anyone that's trying to short, they've taken them out now. And now we got stops up here from overnight, which is London's high up here. So it kind of took it a little bit. It's a little shallow though. Whoa, what the hell was that? So yeah, I'm not interested in anything at the moment. I did have this, whipsaw right here. But we'll see how this continues to hold or not. But for now, I'm on the sideline. Yeah, keep your eyes on this London high up here. And then once it tags that, we'll see how it treats it. Because that's going to be significant. So, there could be an argument from my end to engage this since it kind of gave it up already. You don't have to get the best of the best move. You can simply get something that becomes a little bit more sure. And this is pretty sure delivery through that high once it got up through all this, because it left behind sell side, buy side. It showed no respect to try to dig even at all. So it showed that this was manipulation, and then they ripped it against them, not letting them get in unless you were able to get in something like this. So I'm very curious to see how they're going to treat this. Remember, this was part of the line in the sand potentially. So how they treat this run on stops here is going to be significant for the rest of the session. If it just trades down and then continues, then again, we may have to look for this, or it's going to stay consolidated. But if we were looking to be bearish like we were, this is not what you like to see. You don't want to see a PD array not be respected pretty aggressively. So we still have a chance for it to, just simply be a wick and then continue. But it's really testing the limits of this order block here. And it's testing our limits to hold a short for the idea. Now, that's a nasty turnaround. Look at that. Oh, there was SMT down at the lows too. Yeah, we had SMT at the highs and the lows, and dollar showing some weakness, but not really. It's still intact with going higher. So things are a bit chaotic right now. So we're just gonna have to see how things unfold. We're inside the macro now. So let's see how that delivers. So yeah, we're coming back inside the range. I thought I was gonna finally give it up, but it seems they have other plans. It seems like they're gonna hold still with where they're at. It's inverted that for value gap. That's not a good sign right here for shorts. So it's interesting. We got shallow runs above the high here, basically relatively equal, maybe unfinished business, but we also have it down here as well. It's showing that this downside with this upside movement that overlapped it and this 8-hour fair value gap here, that stuff's acting as a pretty solid support level. So again, I want to see kind of what this is going to turn into because, you know, overall, like I said, the downside is still my main objective. It may start to change that if it gets above this high. Because then, you know, we're breaking through some of these levels that are the pillars holding price in this bearish trend, right? For our analysis, being this, right? The rejection up here leading to this, right? We got a retracement, we got relative equal lows, we got failure swing down there, but we're in this nasty sideways delivery. It could continue to do this for longer than you're comfortable dealing with. Yeah, you see that? It's now hitting our main line in the sand here. So yeah, we may have to start being a little more flexible with this. Daily fair value gap up here. It's for surely a line in the sand for just overall. Because if it gets above that, you know, the short framework is now being upset with this, you know, nasty back and forth and this nasty retracement. So yeah, like I said, how it treats this high up here, they just ran it really aggressively through them and the London perspective. So let's see how that delivers. I'm not sure how confident I am in buys. I mean, this one made sense to simply get up here, but overall, I mean, we're not yet out of the woods. Like I've been talking about with this fair value gap, as price, you know, peaked above, slicing out some of the buy side liquidity. You know, we weren't out of the woods yet for bearishness, and then it offered this. So we're still not technically fully out of the woods yet, right? So we got to be, you know, patient. So I'm going to be on the sideline until something pops off the chart. I mean, this is pretty convincing from this lower time frame that we are not interested for now. You know, nothing's put us in line with going short yet. It just looks like they are in a hurry. I want to see how large this follow through is. If this ends up getting back down below this low to that high, 50% level, we could look at that as a market maker sell model and then get back in line with shorts. And that's coupled with, again, the respect to this midpoint. You know, we're at the line in the sand. We're at the edge of the validation, you know, for this order block to be useful for bearishness. So we got to see what happens here. It's not enough for me to make a really solid decision to engage. So, you know, we'll see. We'll see when that changes. Yeah, I don't necessarily like what this looks like for us to go short. You know, taking out this high, I did not want to see that happen. But hey, it's London's high. You know, there was SMT there. Let me see how SMT looks for now, because we have that SMT at the lows. Yeah, we got a larger SMT here. But again, looking at these higher time frames, it's not screaming to us that it's time to go bullish. You know, it may be the early stage of it, but we're not going to know until it gets through this again. It has to break things. At least for me, right? Because I like to be sure. I don't just assume, I anticipate. But yeah, it's very nasty. Ugh. Nasty back and forth. So yeah, we'll see what happens here. Just know that we took out stops here. We did leave a pretty significant liquidity pull down here. So let's see if we can get it to get us back in line with shorts. If not, say it trades through this aggressively with a displacement again, totally invalidating the order block, you know, we may be able to adjust and try to target the buy side. We are still in a range-bound environment, so it's low probability conditions at the moment with the overlapping candles too. Just this visually in here, ICT has mentioned that you should just look at that automatically as low probability. Because is that a trend? It's not. You know, it's way different type of trading when it comes from this to this. So if you think of power 3, so far it went lower below the open price and then higher. Yesterday we went higher to go lower. The day before that we went lower to go higher. So you could just see it went back and forth, back and forth. You know, very convincing stuff happens on the lower time frame, but it has to be justified with a larger perspective. If not, you're just winging it on the lower time frame. And we all know how that results, right? It's not necessarily the greatest. So yeah, I'm going to be more on the side of caution today because of what we just saw. So we'll see what happens with this. We're still inside the macro, so if something does show up that I want to engage, I'll let you guys know. But for me to take a short and be back in line with shorts, this is going to have to break the 50% of this. Otherwise, if it hits the 50% and then starts to rapidly run again, right? We have this high to that low with a rapid buy side delivery. This was a market maker buy model, by the way. That's why this worked out and was fast. But that's going to have to be traded through. 50% of that needs to be traded through, you know. And then we could look to try to reuse the levels here on the order block on the daily. This was a market maker buy model. And if it gets down below the 50% here, we'll look at that as a sell model and then try to find something similar to this, right? That went to the buy side, just to the sell side to target this. Because we're so early in the session, you know, this makes sense for them to want to, you know, manipulate like this. We took out, so this is the current day's high so far, right? We already set the low there in London. Well, was it in London? No, the low and the high of today was set literally in the last 30 minutes. You know, London wasn't really that quick, very slow. So as a result, because London went slow and Asia was slow, New York session is anticipated to set the high or the low of the day for indices. And that, you know, is a difference between Forex. You know, because Forex faithfully uses London to create the high or the low of the day for Power 3. The indices are special because they're a pure New York asset. So if London and Asia are slow, that's liquidity for when New York session comes in so they can wipe the floor with either both sides and kind of chop around, or it could take one to target the other or vice versa, right? This basically opened up, went lower, targeted London liquidity, paired that up with buy side liquidity from London. We've swept both, so now we got to see what is it going to decide to do here. We're still inside this order block. We are getting a very solid response from the 50% of that. So again, we're not out of the woods yet when it comes to shorts. Dollar's not really accelerating how I would like. Wanted to see if we could blow that out pretty aggressively. It still structurally looks like it's supporting the buy side, unless it gives it up and takes out these levels, especially if we break this low here, which is this low. But until that happens, you know, we got to anticipate and just observe. So yeah. It's definitely a very easy day to have potentially tried to go ahead of the macro and taken a loss. But this is why you wait. That's why you wait for the macros. You're not missing anything by waiting for the macros and not taking a trade right when the open comes out, even if it's really quick. It's better to not engage when it's super quick, because what is everyone trying to do? They're trying to chase price. You know, they're trying to get in. They think they're missing something when they're not. So watch this fair value gap here. If it holds below it, you know, it's going to start helping support the down movement. If it breaks above it and then uses it as an inversion, if it was to break this high, we could use that as an order block for buys. But I'm going to sit here waiting. I'm not just going to try to pick a top. I'm not going to assume that this is going to hold here. I want it to prove it to me what it's trying to do, and I'll take a conservative entry. You know, I'm not aggressive in general, so it's not going to change today. So let's see how this is treated up here, because we got buy side with a stop run, sell side. Now we got an inversion. If it's going to, you know, hold the 50% of that, that's an early sign that it, you know, could still look to continue to go lower, which I'm going to try to assume here until until something happens where it gets above that. That's going to be my assumption. It's going to hold here, and then we should be able to start to see price give some solid displacement. And if it gets above this, right, we have this breaker that formed. I want to see this breaker fail if it's going to go to the sell side. And the SMT down at the lows is something that we can't really discount, because it was present. You know, we did have SMT at the highs. I don't think we have it anymore. Yeah, no, we don't. Nasty run up like that. See that? What do you think's happening right now? Everybody's trying to do both sides. I think shorts, like I said, they're going to be favored. So we'll have to just wait and see. And again, this up here is my line in the sand, because then that'll be supporting the bullish breaker, and I'll look to try to take a conservative execution somewhere up there. And I guess targeting something up here. It's going to be high resistance to get beyond this high, though, if it does go up there. So again, I'd prefer to see the low resistance down here, because we got that failure swing, multiple failure swings, versus this. It's already got a stop run. Work's already been done up there. So yeah, DXY weakness is not necessarily something we want to see. Look, you see that right there? Look at this fair value gap. See the body's closing below it? That's a beautiful sign. If you look at this, this is a 4-hour candle here, this wick. Got the midpoint. We have an hourly wick here. It seems like things are continuing to hold up in here. Dollar's accelerating. We should not revisit this high up here. I definitely want to see it get below this new day opening gap. That'd be nice. If it gets down there, that'd be great. I don't like this small new regular trading hours gap. I can't stand when it's so tiny like this. A lot of times it leads to, kind of chaotic, sloppy price delivery. We're still in the macro. So let's watch this fair value gap here. See how it wants to be utilized. She has definitely slowed down a little bit. This might be an immediate rebalance in here. It's definitely still sideways. Yeah, what a nasty condition this is. Ugh. Still inside the macro. Okay, dollar's now turning a bit. See, if this is going to be something viable to go lower, it's going to have to respect this. If not, and it gets above this fair value gap here, we'll get another leg to the buy side. This will have just been an optimal trade entry. But yeah, I'm not necessarily comfortable in this particular situation here. Yeah, that's okay. Let's see what happens. We got another up movement. See how it treats that. This buy side to the sell side so far, this whole upper portion from this high to that low, we really should not. If it's bearish, it should not even attempt to get back up here, because this is now a balanced price range right here. It should be. If it doesn't hold as such and it inverts that or gets back above it, then you know for a fact that we're going to continue to go higher. Otherwise, if this continues, this stop run will translate to that previous day's low getting targeted. So we'll see what happens. It's not moving fast whatsoever. It started off with viciousness, but now it's kind of like, especially the Nasdaq, of course. Nasdaq is like, not really going to move. If we look at the 8-minute chart, there is an argument for this to be a retracement to go higher. But again, that just doesn't align with the higher time frame analysis we've got going on. And maybe that changes at some point, but we're not going to know until that fails, because our daily chart levels have not been violated, and we're literally inside of an order block. So this is a moment where waiting is advised. You want to see it confirm what it is that you're trying to see. I want to confirm that this is going to hold. You can only do that by seeing the response away from it. If we get this wick to stay intact, that'd be a good thing. And we got this up movement here. If we could stay below that wick from the 2-hour, that's a good thing. I'd really like to see us get back down below this. Right? If it doesn't, and we take this high again, these highs become a target. It's Friday's high. So yeah, let's see what happens here. This would also be a shift in market structure after a retracement if we invert this. So again, it'd be more likely if this gets taken out for us to then look to explore a little bit higher, and then dollars declining and whatnot. So so yeah, that would be what we're gonna do if that happens. But yeah, we'll see what happens. Yeah, if this ends up below this low, you have a breaker that forms. So we got to pin down whatever it tries to do. Preferably it goes lower so it supports the higher time frame daily order block. But you know, you got to be accepting to the fact that sometimes you're going to have to adjust. And I think it may, if it breaks up there, be time to adjust. Okay, let's see. Can this sustain? Can we get a displacement? Are we getting back in line? That'd be pretty nice. Because then that'll be supported, like I said, by that daily bearish order block. Something that I'd definitely be more behind. But, you know, if it gets up here, like I said, we have a game plan for contingency as well. So we'll see what happens. But yeah, this is not an environment to go buck wild, taking thousands of trades. It's just not. I guarantee you people will get their ass chewed out today. I guarantee I'm going to get multiple messages. Guaranteed. Mind you, I haven't called out a trade. I haven't taken a trade. It's just, that's the way it is right now. You know? So if you're following what I'm doing, right? Not that you're going to take trades off what I'm doing, because I don't encourage you to do that. But if you're following what I'm doing, that should be what you have gotten from today. So nothing is to be engaged at the moment. You know, again, there's an argument for this to be an optimal trade entry. Even if that was something I was looking to engage, I would still require it to get up beyond this before I take an entry, if I was to do anything to the buy side. Yeah, it looks like it's going to get through that. See what they want to do here. Very slow, right? It opened up very aggressive, thinking that, oh, it's going to be a pretty nice day today. And now they slowed way down. This is done on purpose. Think about what it does to your psychology. You know, if someone got chopped up in here already, when things do show up, they're not going to be able to engage because they're going to be fearful. They're going to already be too deep in drawdown. Their confidence is going to be bruised. You know, it's just, it becomes a problem that's avoidable, right? Yeah, there's nothing in here screaming at me to do really anything. Again, once we get up above this, if it can continue to hold this like this is here, that would be good. The only way I look to short is if it gets down below this. If not, you know, now we're above this, so now it puts this in jeopardy up here. Dollar's weak. I didn't think dollar was going to be weak today, but looks like it's kind of hanging around. It's not super weak. We're still up close to the highs. But we are seeing a little bit more reluctance to go lower from all these assets opposed to the dollar. So yeah, this up here, we're above that inversion now. So we got to see what this is going to want to do here. So technically at the moment, this is seek and destroy, right? Because we took sell side, took buy side. We're not really doing much. It's slowly gravitating like it wants to go higher, but it's not in a hurry really. You know, this is where you can get really hurt. You got to manage risk. You got to manage risk. Let's see. Oh, it's not really staying above that like we would have wanted to if it was going to go higher. So yeah, we're still not out of the woods yet with that daily order block. Still not out of the woods yet. Everybody's probably not trying to short now. So it's probably a opportune time for them to really smash it to the downside. So now we're pushing outside of the macro. You know, that whole area again is an inversion fair value gap. It's an order block. Breaking down below this would be nice because that'd be a double change in state of delivery. So 839 is definitely a level to watch. See how it breaks that. If it does, oh, maybe picking up now. Yeah, it's really not exciting at the moment. So this is trading, guys. Sometimes you gotta wait. It's just nothing very clean at the moment for us to really get behind. It's just dancing back and forth. Still inside this, so it needs to respect that midpoint if it's going to go lower. Just bouncing back and forth, back and forth. I mean, ask yourself, is your model in here anywhere? Is there any spot in this price delivery that would make you comfortable to hold the trade? You know, the answer is probably no. So watch how this behaves in here. Yeah, it's just not moving really. So I think I'm going to wait till the macro to even consider another move potentially. Just really had, well, any move. There's been nothing. So maybe it delivers from here, right? It's still holding that. Like I said, you want to watch that. It seems with what it's doing here that it's going to hold that level. We got a failure swing up on up in the highs. I mean, correlation is just non-existent at the moment. The Dow is the strength holder for whatever reason. Seems like that's been the case like for months. Dollars sideways. The Nasdaq's kind of just not trying to do anything really. It's definitely holding this, right? It's having an impact, this little fair value gap. We'll see how, you know, how long it has an impact, but there's just nothing to do. It does seem to be holding in this area here. Again, we're still not out of the woods with that daily order block. But then again, we're kind of stuck just in this range. It's like stuck in the mud. Had a flurry of price delivery early on, but yeah, now it's just not, it's not really doing anything. So we'll wait till the macro. And then if nothing happens by the start of the macro, at least 5 minutes before, then we'll just chalk it up as a day that we did nothing. It's better to preserve capital when things look like this than it is to push, feeling like you missed something or have to make money, because no, you don't. If anything, it'll probably be a loss if we do engage too aggressively today. Clearly, it's not willing to really do much, you know, one-sided delivery. Maybe it looks to get back up here because it's still holding this low. But yeah. Yeah, I guess it's going to continue to want to contest the order block. Maybe it takes that high up there. Yeah, it's back above that now, so we should be able to see a push towards this high. So they definitely denied shorts today. pretty aggressively. Made you feel like it was going to, and then it ripped against you, attempted one more time, but now it's supporting this high to that low as a breaker. Now we got this high to that low as an order block. So price coming down into that with this reclaimed fair value gap. You know, we have a pretty solid amount of context that should be able to get us up to here. But then again, we're still in a range. So we're in that nasty range bound type of, chaos. The most of the time, like 90+% of the time, is going to blow people's accounts. So I'm not willing to push in this. This is reasonable though, but it's outside the macro, so I can't take the trade. It's just the way it is. So hopefully you guys didn't do anything too aggressive today. I haven't taken even one trade today. I thought about it in here. Decided I wanted to wait till it breaks this so then I can have, a double layer, double change in state. Never offered it. So as a result, no move. Again, you could have made the argument for this high to that low being a breaker, but you're taking the lower time frame framework against the daily PD array that's been holding price aggressively in a bearish trend. So it's counter trend based on the lower time frame logic, which I'm trying to get in line with the biggest part of the move. Only aiming for 20 to 30 points. But again, I still want to get that 20 to 30 points at a time where, we have the likelihood of getting even more. So there's, not really much fighting that takes place in the market to get to your target. And, at this moment, it's definitely fighting. And we got the Dow that's obviously picking up. Nasdaq's finally picking up too. Again, this breaker, I did see this breaker, but because we were in that daily bearish order block, wasn't able to really trust it, really looking to take off. I did allocate the likelihood for us to take this high out and then potentially go, especially once it came all the way back. How it took this high was going to be significant, like I said in the moment. Now that we've taken it, we had tried to get back below it and got back above it now. It's putting the high resistance level up here I talked about potentially in the crosshairs. And in order for it to get through that, it's going to have to break the daily fair value gap too. So is it really going to do that? Because that may, again, be at the start of things rolling over, right? Back to the buy side. And then we may possibly see dollar. Well, the correlation is having an issue overall. If we're going to go higher in the dollar and the indices and the currencies all together, that tells you the condition that we're in. It's not the most favorable. So going back to what I said earlier, you shouldn't have hopefully taken a trade today. There's really nothing in here unless you took the breaker, right? That larger breaker from the 5-minute chart, right? And if you took that, okay, so be it. Good job. But I didn't trust it. I didn't trust that breaker, even though it was there. We talked about it. I wanted to see it fail so we can use that daily bearish order block to go lower, but it just didn't do it. So, and we inverted this fair value gap. When that was happening, I said, I don't really like that. It's not really the best sign for shorts. And you can see that it's basically held up in that inversion there. Now it's targeting these. These are definitely relatively equal in here. But again, us taking this high is going to put this high in jeopardy. Because then we'll have an order block here, right? So it'll be a change in state to the buy side. It's also kind of holding up in here too, like we talked about, right? I don't like how this has been holding like this. We needed the order block here plus the respect to this fair value gap to really smash us below that. This order block clearly for the last, 2 weeks, the midpoint of that, you see the body's perfectly closing, not even getting down below it. It's wicking, but it's closing above it. Now, that's not necessarily the greatest sign for bearishness, but today was going to be the last attempt potentially from that daily bearish order block to get us through it, and it didn't, right? So it seems like the bullish order block from that daily chart that we have had a hard time breaking through is now, potentially picking price back up. So we'll have to see if dollar can decline to agree with this. But yeah, so we got above this here. So this high to that low. If this is going to continue to be healthy to the buy side, it's going to have to respect the midpoint of that. We've already respected this. We've really pumped through that. So if this is going to keep going higher, we got external taken, internal ranges right here. So it should not break through 50% from this high to that low if it's going to be healthy to the buy side. It looks as though that's the case so far. So we'll see if that continues. For me to be bearish, we really got to get down below this low. Because it's really not cooperating with sell side at the moment. That order block is not playing too much of a role. If anything, it's starting to lose its validity. Like we blew, well, yeah, it's blown well past the level that I would want to see it hold if it was going to hold to be bearish. So we're either going to stay in this range and bounce around like it's been doing the last, 1, 2, 3, 4, 5, 6 days, or it's going to break this and then continue to go, right? Those are the two options for me right now. Just simply because it didn't respect this, and it's still not respecting it. So we're not going to force sells or be married to it. So yeah, again, this high, if it gets traded into, maybe it goes a little bit, but should act as a balanced price range. What is that? Yeah, dollar's starting to pick up. We're inside of, let me go back to, where it is, right there. Yeah, there it is. So yeah, now we're inside that daily fair value gap now. What a nasty little, almost an hour? Like 30 minutes. Went lower, hung around, and then it slowly opened up. See how small these candles are? It's like very slowly gravitating. It's gravitating there, but it's not doing it very quickly. It's a pretty slow delivery in there. Very small candles. Very deceiving. But yeah, it's not, I don't think it's even going to offer another run down there. So again, today might just be a day where no trades are going to be taken. Because now I'm not gonna chase it either. But this is a good thing for potentially tomorrow's trading, because now we've pretty solidly confirmed, if this continues to do this throughout the rest of the day, we don't have any reason to look for shorts anymore. And it might look to, get above the daily fair value gap in there and then invert that. It may do it like literally in the next couple hours. We definitely look for the, more buy side liquidity once this high is taken. Now if it wicks it and comes back in the range, I mean, what a mess, right? So we'll be more on the conservative side if we get that type of nonsense. And then any engagements with that type of condition, again, you're looking for hourly highs and lows, previous session highs and lows, previous day's highs and lows. You're not looking for anything too far away because it's not willing to go anywhere. So yeah, this order block, we could see how that was respected here too. See, I've got the high up here. We've got the high up there. See that large wick in there? If it's going to be bullish, if it's truly bullish, if it comes and taps that, that's going to be a balanced price range. Yeah, that whole wick in there. So this fair value gap retracement, you know, if we do look to pull back a little bit, we should not go beyond this range in here. There's no need for it. It's all balanced in there. Sell side, buy side, sell side, buy side. You know, we're already really close to this high here too. So dollar's opening up. That's interesting. See, we're not in the macro yet. Yeah, so it's been sliding. Notice how it's set up this move in the macro, right? The 750 macro or 650 to 710. So we may get a little retracement, and then the next macro comes, and then maybe that's what gets us above the high up here. Yeah, you know, shorts got turned off once we got up above this. It's all, you know, targeting the short buy side. Dollar's just giving up the downside now. So yeah, we'll see how this wants to go. And again, if it breaks this low here, that's a problem. That'll turn us off for the buy side. And then we'll have to adjust the shorts for the dollar. And then, you know, we may see that have a reverberation through these other assets. Water, water, water. Yo, what's up, Joan? So yeah, it hasn't really been much being engaged. I wanted to see if we could hold this and go short. It didn't go short. Got up above that. Dollar finally gave up and told us what it really wants to do. I wanted that to go higher to support the shorts support the shorts for the indices. But we haven't got it. We got a lot of these small ass candles, very slowly getting to where it's trying to go. We had a rapid movement here, trying to set the tone, and then slowed down. And then ever since, it's had some, you know, movement in here towards the buy side, but you know, we're still inside that higher time frame range. I mean, it's just nasty sideways movement. Look at that. I mean, you can imagine that if you want to blow your account, this is where you'll do it in something like this. Because you're not going to have huge follow through like this. It's just bouncing back and forth. So again, when it comes to, you know, this possibly retracing, you know, it shouldn't go too deep into here. You know, we'll see. Again, we're still in a range, so it could just consolidate. You know, so that's why I'm not really too interested in participation right now. You know, prove it to me that you want to make a heavy run to the buy side, because this is not enough. We see early signs in there, but it's done it before and then came all the way back. You know, so it's until it's done with this range in here, this is what could possibly continue to happen, back and forth, back and forth. So continuations sometimes can be unreliable in that type of scenario. With the dollar exploding to the downside, we should be able to see more of an acceleration open up. But we're just gonna have to see. This retracement only has up to this point. If it goes deeper, that's a problem. We're clearly seeing spurts of low resistance to high resistance. Low resistance. Are we going to go into high resistance again, where it just goes sideways, accumulates below this high? This gray box is the daily fair value gap. I did mention that this here is a run above the high here. It's going to present you with a potential high resistance liquidity run. So it may not be a very fast paced run through that high. Why is it high resistance? Because we have the buy side already taken. Now, if it was a failure swing, it'd be a little bit different, because then, price has unfinished business up there. But with the high set the way that it is in this, we may not get, that super dynamic, beautiful run through the high like we normally like to see in low resistance. So we'll just have to wait and see. It may hold off. We're ahead of the macro, so. So yeah, it's just one of those days. Again, hopefully you guys have prioritized capital preservation over anything today. And if you caught a buy, right, say you saw this and, there's something in there that would have made sense to you, good job. Nothing in here was comfortable for me to want to engage, and that's kind of just the way it is. Unfortunately. But, I think it was due for a cool off, because we've had a pretty crazy last couple of months. It's just been bang, 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 bang every single day. Like, holy crap. You got to prepare for those times when, it maybe doesn't do exactly what you wanted it to do. So yeah, we'll see. If it's truly going to be something reliable to the buy side, we're not going to attempt really much of this at all. We should just see internal to external, not deep retracement to internal, because that'll put us at risk of this just consolidating even further. But the fast characteristics that we like in a trending environment would be something shallow like this. All right, doesn't have to come all the way down to this. Right, this down movement here in itself is a bullish order block, I'm sure. Yep. Right there. But you see that wick going into this displacement? It should not need to come back down into that. It's already got buy side, sell side, buy side again. So if this is the target, the anticipated retracement can go as far as this. Going deeper could be a problem. But we got that wick in there too. That's, again, it's buy side, sell side, buy side again. This whole area in here should be classified as a balanced price range. If it's going to continue to be bullish. Yeah, we can see the wick right there. So let's see what this macro brings us. And we do got some buy side up there. Yeah, dollar is just losing steam. It was rip roaring to the buy side. Now it's like, let's just hang out, right? Let's slow down the pace real quick. Yeah, gold had a pretty nasty retracement too, huh? Oh, it's freaking screens. I might have to turn down the brightness. If you guys don't have blue blocking glasses or something to protect your eyes from your screens, since we're on every day, I highly advise you to do so long term. If you don't want to go blind, have eye problems. So yeah, if nothing happens in the next 10, 15 minutes, we'll put a ribbon on it, call it a day. Just chalk it up as a day where, nothing was engaged, just didn't show up. Things in the way that we wanted it to show up. We had initially figured the shorts were going to be what we wanted. I mean, again, there's an argument for this scenario, right? We've talked about this. Right? We said I do believe that we'll still look to go up in here. I don't like how things look overall, not just on the Nasdaq, but just overall. I don't like how things are at the moment. I'd much rather see today pass and then see what comes tomorrow, because we could use the information from today to solidify whether tomorrow's going to be bullish or bearish. But this consolidation nonsense where it's just whipping back and forth like a madman, I can't stand it. I could trade it, but do I really want to engage something like that where I got to babysit so much? It takes more work mentally. We do it, right? We do it multiple times over and over for years, but you'll get to a point where you're like, all right, well, I know what the best scenario looks like to be able to engage, so maybe I should just wait for that. And that's kind of where I'm at. Yeah, see? This high is right there. They kind of jolted up there a little bit, but what is that doing? That's making people think, oh, it's going to target that high. And we're stuck, right? It's having some jumps, but then that's followed by very slow pauses that sometimes go for 20, 30 minutes at a time. Like this, we've been in this little range for almost 20 minutes. And this one too, 7 a.m. to 7:20, literally 20-minute spans of sideways delivery off the heels of displacement. Yeah, see, dollar's not necessarily fully interested yet to go lower. It's kind of stalling out again. Damn, I don't know if y'all heard that, but my dog just squealed. I don't know what the hell. What did he just do? I'm gonna have to go check on him in a minute. That was loud. Yeah, you see how price is just doesn't want to go, doesn't want to do anything. I still believe that this high is a candidate. Again, we have price kind of boxed in. We have that balanced price range here. It's the fair value, the wick. Right, the wick overtaking the fair value gap in there. So that's why it should not need to come down there if it's going to go higher. So it could maybe run down, take this out, set something up. Honestly, what I think is more likely is they're going to hold price inside this. So yeah, we'll see in the next 5-10 minutes if there's something to do. We'll see how the response from this can be. Yeah, more likely than not, I am about to take an execution. It's just not worth it. I'll just wait till tomorrow. But yeah, before we go, we'll watch this, see if this is going to hold the way that I said it should. What the hell is that? Yeah, dollar's dropping, so we should be able to see price get a little more energetic. This has been a nasty back and forth range since last week. Huge decline, huge rally, sideways, decline, rally, decline, rally. I mean, back and forth it's wild. Look at it. It's craziness. It's crazy to think that, up to today, every day we've been able to hit something. Today just kind of didn't cooperate. There's moves obviously to justify, like I said, with the buy side, but I was not wanting the buy side. I wanted to see that daily order block that we watched price trade through, get traded into, respect, and then give us a large range, pushing us out of this nasty consolidation. I felt like it was set up fairly perfectly because we had this delivery, stop run. It was Tuesday, so it could set the Tuesday high of the day or high of the week. London was slow. Order block was present. Price was navigating into it. And I wanted to basically anticipate something heavily displacing, which it started to do, right? I thought if anything, I was going to miss the setup. Then I waited and I'm like, all right, well, let's see how this reacts a little closer to the macro. And the waiting for the macro kept me out of this short, which I could have engaged this to just try to target this and take 20 to 30 points. But I was kind of stuck in the lion's portion of a down movement, rooted in some of these upper time frame levels I was talking about, and just the scenario that I just painted. That's what I wanted to see today. But sometimes you can't get what you want. And then of course, once it inverted that fair value gap up here that we talked about earlier, this right here. Once it did this, price turned around. And then it was all upside from there. Yeah, the macro didn't, I mean, it kind of set up the move. It didn't move until after the macro, right? Inside the macro, it kind of just hung around. The 550 macro delivered in line with the daily bearish order block. Yeah, it set those equal highs there. And that became the target. Wiped both sides, London high and low. And then now we're up here, right next to the previous day's high. Yeah, we got this small little gap in there. Oh, man. Yeah, so again, there's a risk of this just not giving that follow through. Again, we're still inside this nasty range. It's an inside day actually too. Yeah, that's a problem. That's a problem. I think we'll leave it here. I don't think we're going to really get much. Definitely observe this. I don't really know the likelihood of it wanting to give something exaggerated. Maybe PM session is a little more clean. I'm not going to be here for PM session. I got things to do. But maybe you guys can observe that. Tomorrow we'll obviously be back. Well, I'll be back on live with my private group. But here on the YouTube channel, I'll be back again on Sunday with you guys. Of course, I'm always open to DMs and questions and whatever it may be that you guys need help with. So just let me know. Hopefully you guys didn't do anything too crazy today. If you were able to catch buys, kudos to you. There was just not enough confluence for me to want to get in line with a buy, given the higher time frame positioning and where we were at and the narrative that was being painted. We did talk about the breaker when it formed. I didn't know how much we could trust that because it was the lower time frame bullish breaker versus the daily bearish order block. I always go with the daily PD array if it's one or the other. So, we kind of just went range bound after that. After it kind of delivered the breaker. We did confirm that it was going to continue to want to reach higher. Once it inverted this fair value gap in here, like we talked about, this little gap in here. And then whether you were able to find something in there for continuation or not, obviously, it's up to whatever it is that you do. And again, excuse me, we do have this wick in here, right? This up movement is this wick. So if it's going to be bullish order flow and it's not going to drop and be bearish, we don't want to see this contested. It should be very sensitive because that is a discount PD array that if price is bullish should be respected. This gap, because it has that wick through it, should be classified as a balanced price range inside that area. It could tap a little bit into it, but we definitely don't anticipate this being totally overtaken. If it is, we're in that consolidation BS that, we see clearly happening on that higher time frame. And then that'll continue. So yeah, with that being said, again, be safe today. Don't do anything crazy. We'll see what happens for the rest of the week. And yeah, hopefully you end the day. Hopefully you're going to end the day with no pain. And if you did encounter something where you maybe broke the rules, which hopefully you didn't, but if you did, just remember, this is part of the game. You know, there's days that are going to be just like this. More often than not, you know, you'll have to overcome things like this from time to time. And, you know, discipline is what will save you from hurting yourself in these types of situations. Okay. So yeah, with that being said, God bless you guys. Appreciate you for hopping on. Let me know if you have any questions or need any help. I'm always here to help. But yeah, with that being said, I will see you guys on Sunday. Have a good rest of your day, you guys.